Good morning, traders. Good morning, everybody. Stelios, are you around?
I am here. Hello.
Good morning, Stelios. How are you doing this morning?
I'm very good. Just got my aircon fixed, so I'm a happy man.
Yeah, I was showing this Trader Summit page to start with. Let me just kill my.
Let me put the link on the chat box. Hold on.
Yeah, let me just kill my squawk box just for a second.
There we go.
Yeah, so to start with, you should know by now, you should already have registered by now for the Edward Scissorhands Trader Summit 21st to 23rd. Look at this picture. I first of all, I didn't even see there was a bunch of microphones put together. It just looked like I had actually a bit of a scare. I think developers must be Edward Scissorhands fans.
Come on, it's nice. It's different. It's different. We're always different.
Yeah. But anyway, guys and gals, register for it. It's going to be some event again. We've got like absolutely stellar lineup of speakers. We're going to have some debates. We're going to have some conversations. We're going to talk about everything that's going on in the markets. Really, it's going to be some special events. So don't wait.
The great thing, sorry to interrupt. The great thing is that we have a couple of energy experts like Tracy Schuchart, and energy. Let's face it, is is everything at the moment. And we have people like Daniel DiMartino and Joseph Wang, who are both deeply involved in the Federal Reserve. So really, really good people to speak because let's face it, the Fed and the other central banks are still ruling everything. So it's good to get an inside view on how they think, how they, how they act and all that. So that I'm really looking forward to those.
Yeah, absolutely. And we're very fortunate to have people who can talk about the real drivers in the market. So this is going to be something. And since and it comes at a good time because we have seen over the past sessions, and let's say over the past week, we have seen the data start to evolve a bit. And this is going to happen in 2 weeks, which could be we'll have another bunch of data in the meantime, and those people are going to be able to analyze whatever's going on. Joseph Wang, he has been at the source of everything. He has worked for the Fed, so he's one of the speakers.
One thing I wanted to mention is that this is done via Zoom, and as we all know, Zoom has a capacity limit. So if you register, it means that you reserve your seat. Plus, you get the recordings first before everybody else. So it's not just I'm just going to wait till last minute, because we have had occasions where we were really close to our limits in terms of seating. So
yeah, absolutely
mentioning it.
Absolutely. So register, even if you can't watch it live, there's going to be a recording of it available afterwards. So it's really, it's going to be a special event once more. And we are going to have a few interesting chats and conversations with people who are very, very close to FX markets as well. And I think I'm going to be part of a couple of them as well. So it's going to be something I'm at least really looking forward to this one. All right, moving on. Let's see what we've got going. Let's do a little roundup. As I said earlier, we start to see data. I won't say rollover, but we start to see some weaker data coming in, and it translated really in what's happened in the interest rate market, and we'll have a look at that, and it really impacted everything over the past 4 or 5 sessions. We're going to have a deeper look into it. So let's quickly run over something that really set the ball rolling, send the dollar to its latest low point. Is the yields opening? There was a million less than last time, less than before, and that was the final little straw that broke the camel back just for the session that we saw yesterday. Sent euro dollar close to parity, sent the cable close to 115. We're coming back now, and I'll show you why in a minute. But that was like the one thing that really drove the dollar into the defensive yesterday, and against virtually everything. Even dollar yen came off there, so that is something. So overnight.
By the way, just to
Yeah.
answer our friend's question, it will be recorded, the Trader Summit, and it will be archived on our site, but it will go live a couple of weeks after everybody gets it. The registrants gets the recording, so you will get it eventually. Yes.
And by the way, on all our Twitter handles, on the ForexAnalytix, Forex Flow, our personal Twitter handles, the link is everywhere on there. So there's really no excuse not to register for this one. So moving over to the data that we had out. The main one overnight was the RBNZ. They raised 50. There was a discussion to raise 75. Kiwi jumped. Aussie Kiwi is coming off. It's now stabilizing. They had a big dump on the RBNZ rate decision, because, as we know, the day before the RBA only raised by 0.25%, and they are like looking at the situation. RBNZ, okay, even though they say that they needed to front load everything, they are still pretty confident in what they are doing. So the Kiwi has been benefiting from it. Versus the dollar, it shot up, but then the dollar has had a global comeback this morning, and so the Kiwi dollar is not really holding its gains, but as long as it's holding above 57, it should come in somewhere supported around there. But that's for the RBNZ. So we have a little divergence building here between the RBNZ and the RBA. The terminal rates for the RBNZ is expected to be nearly 1% above that of the RBA. Of course, different size of economy still. The Aussie Kiwi has suffered from it. Then over to what other data. Services PMI in Japan, not a lot to see there, still holding above 50. That's not too bad. Earlier this week, we had a bit of a weak Tankando, so for the time being, the yen is still firmly plugged into what's happening on the US 10s. We had the German trade balance. It's a little lower, but okay, I mean, give and take a few billion euros, it's not going to make a big difference. It's still positive, and what's somewhere positive is that both exports, imports for various reasons, gas and everything, are a bit on the rise. So from that point of view, no big dramas, I would say, right now. Over to the French IP, a bit stronger, well, quite a bit stronger than expected, August data. I do think that in France, on the global numbers, we saw a little bit of an August revival. So we'll have to keep an eye on what's happening in September. The rest of the Europeans, a tad weaker than expected. Germany again coming in weaker than expected, sliding versus the prior ones, and so that makes the global European composite services and composite PMI coming back down as well. It is part of the euro coming back off, I reckon, versus the dollar. So I think we'll have to keep an eye on those. If they continue to slide, that means that the euro can really go into a hard winter. In turn, the UK services PMI is holding just the 50 line, where it was expected to dip below. Composite a little bit better as well, but it hasn't benefited the sterling much. I think the market is looking at more macro fiscal political problems right now in the UK. Also, to bear in mind is that there's some discussions going on again around the Northern Ireland Protocol. We heard from both sides that technically there might be some positives in there, but we all know that politically it's going to be tough for the Europeans to give up their original plans and
Okay, sorry to interrupt. I'm stepping
Yeah.
away for 3 minutes. Okay, I'll be right back.
Yeah,
Okay.
yeah, no problem, no
Okay.
problem. I'll just continue to with the roundup.
Okay, I'll be right back.
So on the there's a lot more political stuff going on right now, but do keep an eye on those PMIs left here and there across the channel and across the ocean later on today. So what's coming up? We have the Opec meeting today, so we should hear from them, I reckon, in about, is it an hour and a half from now? If anyone has a clear view on the timeline, let us know. It says in 18 minutes, but I'm not sure if it's already going to be decided then. Anyway, we started with rumors about 1 million barrels per day output cuts, and now we already had rumors yesterday that it could be up to 2 million. So we saw the oils make a pretty serious comeback over the past couple of days. It's all going to depend what OPEC decides whether we can keep those levels, and I'll have a quick look at what the oils are doing. So then moving on, mortgage applications, mortgage rates. I don't think there should be a big surprise in there. The mortgage rate will go up. Applications might continue to come off unless there's a bit of a surprise there. ADP coming out. It's been a bit of a blind dart. This one. We've also seen that it's not very much correlated to what the NFP may give this week. But anyway, the algos will be plugged in to it, and we may have a bit of a wobble when those ADP numbers come out. If it would print a second disappointing month, we'll have to be a bit careful what's happening on the currencies. And I'm thinking about the euro-dollar parity and the cable back at 115, for instance. But let's see what they bring. Bit of trade balances. I think going forward they will have a lot of importance again. But right now we have seen the past few trade balances across the Atlantic not having that much of an impact. And then we are in the ISM services territory. We've seen the ISM manufacturing and especially the employment index come off quite sharply. So I think the market is going to pay a pretty close attention to see if it's a global economic thing. So those might be a mover again today. And then we'll have the oils. Last night, what did we see? We see the API had a draw instead of an expected build. So that was an extra push in the back of the oils. And let's see what the crudes are giving. I think last week we saw. Last week we saw a draw, and I think that was expected to be a build as well. So we keep an eye on that. What's happened for the rest? A few headlines. The gas storages across the channel, as well in the UK as in Europe, seem to getting replenished quite well. They are running a bit ahead of schedule. Of course, it came at a price. Okay, Austin. I've seen your question, Austin. But those gas storages on both sides of the channel are being replenished at a pretty high tempo, and I think it was Germany that just came out saying that in case we would have like an okay winter, they would be able to still have about 20-30% of the storages left by the end of the winter. But of course, there's a lot of question marks around what kind of winter we will have. But also in the UK, it seems that yesterday I saw this article on Reuters by John Kemp, who is the one who is really paying close attention. He's the energy guy over there, saying that the storages are at near record highs. So from that side, it's a bit of a better news. And then, yeah.
I am back. Hello.
Okie dokie, Stelios, welcome back. And then we had Putin coming out saying that he might address the nation once more today. So that sent a bit of a shiver through the spine. We don't know what he's going to announce, and I don't want to make any bets on what he may be saying. People are obviously scared of which kind of instruments or weapons he may be using to regain the ground that Ukraine has been recapturing of late. But let's just wait and see what he's going to say. I don't want to take any bets on those kind of things. Right. Still, have you seen anything else that we should talk about right now?
Well, I missed a lot of what you said, but
well, I spoke about Russia, about the oils, about the
yeah.
mines, the OPEC, RBNZ, gas storages, and I was ready to go and have a look at some pictures.
Sure. I mean, the other thing which I think is very important is OPEC, right? They're talking about the cuts, the supply cuts, which is interesting because okay, the oil has dropped from the highs, but really it's still it's relatively tight. But you know, the OPEC cartel, they obviously have an interest to have the product that they sell at a higher price. But anyway, it's interesting because the US do not want a production cut, obviously, and OPEC are considering it and are probably going to do it. So that's something to keep an eye on. And yes, and oil is at an interesting junction because remember, these levels, this area around here used to be support. Now it's resistance. If they do go ahead with a cut, and it's as expected or more, then I think we're going to be heading back towards 100.
Yeah, this level, yeah, and we can even see technically it has its importance around here. Where are we trading? Yeah, we're trading just around there actually. Yeah, so this is going to be an important level. What I wanted to say though on this OPEC thing is that if they would cut 1 million barrels per day, what was originally rumored, seeing the underproduction and under the different countries already under delivering, I've heard and I've read that the actual output wouldn't perhaps change too much, and I've got the impression that the market or the OPEC people wanted to send a message that yeah, if such is the case, we are ready to cut more. So, but we will see pretty soon what their intentions are. So this is the oil and the level that we were talking about, call it 85, 86 bucks. We've had a move down below this, went on to the support around the 77 zone, which then held, and we saw the steep comeback. We can call it a steep comeback. It's about a 10% move. Don't underestimate it. I mean, the markets nowadays are, I mean, a percent is nothing anymore.
Yeah,
it's crazy how people reprice stuff. And again, I don't really like to use the word repricing. It's not like really big markets are repricing their stuff. It's just that the hedging is going at such a fast rate. And the speculation is going at such a fast rate, and people really want to grab very, very fast big money that we see those swings happening. So yeah, let's wait for the OPEC and see what happens here. If indeed they are cutting by 2 million barrels per day, I think 90-91 is going to be a level, and then back up in those 95-97 zone will be important as well. And as Stelios was saying, why not ramp it up again at to 100, because that's what they really want to put in place, right?
Yeah.
Oh,
There are a couple of questions I just want to very quickly address before we continue. Our friend Austin is saying, what's our view is on trade balances, how these can change perspectives, etc. The main thing, obviously, the way a country works is very complicated, but the main thing is that if a country is a net exporter or importer, that's where the trade balance numbers are important in terms of the currency. Because if you're a net exporter, just like China, for example, is, you want your currency to be weak, right? Because you want to make your goods be more attractive. If you're a net importer, like many Western countries, you want your currency, theoretically, you want your currency to be strong so that you can buy the goods that you buy from other countries with less of your currency, basically, right? So, but for me, I mean, it's a pretty complicated thing for me. That's the net. That's the thing I look at, and you know, you see countries intervening on the currency. You know, you see the PBOC. You know, for me, that's as far as I go. I mean, I don't know if you have any more, you know, detailed opinions on trade balance, but that's as far as I look at it. In that respect.
Yeah, the thing is as well is that trade balances do have impact the country's current account, and
yep.
One of the reasons why yen has been weak is that due to the pandemic, due to the supply issues, the current account in Japan, also driven by negative trade balance, has dropped into negative territory for a while, and that also is usually weighing on a currency. Without going too much in detail, we've well, I just want to take one historical example. Is that Germany back in the in the 80s, 90s, you couldn't weaken the Deutsche Mark when we were still trading before the euro. You couldn't weaken the German Deutsche Mark, even if their interest rates were rock bottom versus other nations, because one of the reasons, and one of the main reasons, and in those days it was really traded a lot, one of the main reasons was because they were running heavy positive current account balances. And that is also impacted by the trade balance. But I think if we start to talk about all this in detail, it's going to take us a couple of hours. So I'll leave it to that. But if you want to know how trade balances impact perspective on currencies, that is it. Now, we see that the US is running a negative trade balance, but they have been running it for decades. So the market has got to grips with it, and since a lot of everything is expressed in dollars, they have people just need to buy dollars to buy products. So in terms of trade balance, that's quite offset by other by other things right now. And then since we're on the Q&A, I see in the Q&A thing is Chuck Vincent's question: how will US debt of $31 trillion affect Forex markets? Well, let me tell you just one thing. We have been talking about US debt and debt everywhere for ages. And at times, it comes back to the surface and it weighs on the currency, and it weighs on sentiment. But and as I was saying a few minutes ago, I think going forward, once the supply issues, all those, once the global economy, let's put it that way, is going to be completely past COVID, or at least live with it, and we are going back to business as usual, which is not yet the case in places like China, which is the second biggest economy in the world right now. Once then, I think trade balances and perhaps deficits might resurface. But I have a very particular view on that, is that MMT arranges a lot for what debt is concerned, and for the time being, I'm really not trading or really not even looking at that, and the market is really not trading it right now. We'll trade it when the market trades it.
Yeah.
Do you have any other opinion about it, Stelios?
But the debt is going to keep going exponentially, not exponentially, but it's going to keep rising because the US, all the other countries are running deficits. That's how it is, and I don't see any government changing that.
No.
Not in the immediate future anyway. So the debt is going to keep going. They're going to keep raising the debt ceiling. They call it a ceiling. It's not really a ceiling. It's a level, and that's what all major Western economies do. So what does that mean? More money, money supply increases. Real assets get revalued every few years. So I don't think this will ever stop happening. So any real asset, and by real asset I do mean stocks as well. Companies like Apple or Amazon, whoever, they have huge amounts of infrastructure, real estate, all that. So all these are going to get revalued over and over, higher and higher. Now, obviously, it's not a straight line. You can have 50% drawdowns, as we've seen, COVID or whatever, but it's just going to keep going, and it's just maths 101, literally.
And I think you touched an extremely important point there, for the markets at least, how the markets look at it. The markets will more look at how the companies fare than right now, than how the debt is going in a country, especially the US, but it's a bit everywhere as well. If your country can be in big debt, but if the markets think that your companies are doing fine, perhaps thanks to the rise in the debt data, the market is not going to be very worried about it right now. All right, let's move on. Pictures, US 10s. We did reject this 4% level. We already spoke enough about the importance of this 4% level. We actually could see a little bit of a head and shoulder there, but I'm not sure if that works in rates. But what's interesting to me is that I had this support here in the high 350s, and that's been holding, and now we are already back to 371. So I reckon we can see a bit of a range play right here and now until we get back into the until we get into the labor report later on. And I would say that around 380, if you look at the traffic that we've had here as well, we may find a bit of equilibrium in the yields right now. Unless some things got thrown over by the ISM this afternoon, I don't see why we should get out of the call it 360, 380 range right here and now. So, and that's music for later. If on Friday we would get a really bad report, this could really be repriced quite severely, especially the short term. But as we have seen, the twos, they are with a little bit of a similar pattern of a new kind of channel in there. But they've been holding that 4% line pretty well. So that means that barring hedging and unhedging, I really think the market is convinced that the Fed, because the 2 years are the ones trading relatively the closest to Fed expectations. They do think that the Fed is going to go above 4% for the time being right now. If we get a bad report, though, on a really bad report, I would say lower, much lower NFP data and a much higher unemployment rate. This could get a bit of a knock on the head. And there I would watch the 380 as well, 375, 380. Moving on, quick look at the metals. Okay, we had this trend line broken in gold, and I was speaking about this range yesterday again. This has been a traffic zone in the past, has been trading around there, has seen tops and bottoms, and this 17, 22, 29 zone. We've also have the 55 DMA in there. And now we're coming back to rest on this. We're actually below already on this trend line. We're again talking about 1680s. Stelios already mentioned that in our room as well. Same here. I'd rather expect us to be in some sort of a range until Friday. But there is, as the market is going so fast, I'm always trying to be cautious here. It is possible that we lose these extra 25 bucks again and find ourselves at 1680 into the NFP. But keep an eye on 1729 here, 2930. I think that's going to be an interesting one if it pulls through. Over to our silver. This is this trend line. We tried it above, and now we are already well back below. I told the people yesterday about this as well, 2106. We did rally up to 2120. I do have a bit of resistance up in the 2140s as well. And now we are correcting. It's going fast, guys. I mean, the thing with the metals, as with everything, it's really going fast. I mean, if you look at the move lower on silver now from 2115 yesterday to 2035 where we are now, it's a nearly 4% move.
It's not for the faint-hearted, yeah.
No, and you know what? And I understand when the bond traders were saying that, even the bond traders in banks, they were saying this is getting crazy. It hasn't stopped, and it doesn't stop in any instrument right now. So on the sides of just looking at those pictures, I say to everybody, still be careful with the amounts you're running, with your risk. Still be very careful. It's not a market which is calming down yet. But we did warn about that at the end of August, that from September things would heat up again, and they haven't failed to heat up. So yeah. I'd say watch the 20 zone on silver, and then back into this 1940, 1960 zone, which has been traded a lot as well. So keep an eye on that one. It would mean another 4% lower, but in this market, who knows? But first of all, keep an eye on this 20 zone. If the rates calm down, because everything is linked to it, if the rates calm down, this may actually already be enough for this move back down correction. It's also close to earlier September high. Right, currencies. This euro dollar trend line. Let me clear this one up a little bit, because it's I'm getting remarks that my charts are not clear enough. So I'm going to clean this up just for you. So here, the trend line that we started from February is now coming in at parity. It's right there at parity. And as we said yesterday on the flow show, I wouldn't be surprised if we went into the NFPs around parity. We did it a few sessions before, but it's been rejected. So that tells me that the market is still in a range trading pattern right now. The channel bottoms came in around this 95 and a half. We had a bit of a level there as well. So we've got 4.5 big figures to play in, like in the rest of the instruments. I would say though that 99 the figure, 98.70, and then here, which was where we stopped the first time and then flew through yesterday. 98.35 now are going to be intermediate stations for me. I do think that the problems in Europe are not done, but if we start to have a bit worse news in the States, and then let's call it less bad news about gas, oil, and everything, maybe the euro could at least tackle parity. We will see after the NFPs. But in the meantime, respect the ranges. On the cable, a bit similar. We went to test the 115. I didn't think we'd make it up here really. I thought we'd stop around this 114.40. It just went the 50 points too much for me to feel comfortable, but it has rejected the 115, and now we are looking back at the first decent support around 113.70. If that would go, then we are talking back levels in the 112 zone, 113, 112 zone. I'd say a bit rangy for now as well. Nothing to worry about in regards to what the PMIs were. Nothing much to worry about, but the rest of the data are a little bit weaker. And keep in mind those Northern Ireland folks as well with the EU. We just had a few headlines out here. Kremlin votes to retake the annexed lands lost to the Ukrainian advances. On reports that the US says Ukraine may use supplied weapons to strike Crimea, this is evidence of US involvement in conflict and extremely dangerous. Here we go. This is the Kremlin saying that they are going to try to reclaim everything, and that means the euro get a little bit of a slap. The dollar is making some more advance here. Yeah, a headline-driven market. Euro sterling. I do think on the euro sterling that this was a bit of a washout that we saw yesterday and the day before, down around 86.5. We thought globally that 87 would have held, but then we had the washout. But this is a quite nice traffic area here as well. So I personally think that we may be building a little bit of a base right here for at least a correction back up to call it 88, and then see what happens there. Just stabilize the market a little bit. We can see here there's another well-traded area, 87, 88 on the top side, and roughly where we are on the bottom side. So personally, I think we may correct just a little bit and see what the events tell us to do with it. Dollar yen. Well, yesterday I was saying, like, I was really surprised about this 143.90 figure, how well it held. So yesterday during our day it held, but then in the dead hour of the Asian markets, when nobody was watching, they decided to go and trigger a few stops, and then immediately rebounded after that. I still think this 143.75, 144, the figure area, now that we've seen what happened, is going to be an important parameter. And I've been alerted by Gregor in our room, actually was showing this, and this could be a bit of a flag developing as well. If we start to get back above 144.70, we may have a look higher again. I tried the hold, I tried the break, and I got slammed the saloon door in my face. But then luckily I bought back more than I sold on the way down, and I made it back. But so we are back in this 144 zone. Really, it's a bit undecided here, but forces to admit that we're finding bids on dips. Of course, it's helped by the US 10-year yield, and I've always been saying if that starts to roll over, then be careful for the dollar yen. Anything else? Is there anything you wanted to look at in particular, still?
Not really. I mean, the main mover today is metals, and obviously we have a little bit of risk off, but it's all relatively orderly. But metals and especially silver are dropping. It's understandable because silver was up, 10% in 2 days. Yeah. If it wasn't for the payrolls coming up on Friday, I would be having a bid at 20.01 for silver. Yeah. But I am not doing anything because payrolls, we know how it is. Plus, I already do have a position now. My average is 20.30, if I recall. So basically, roughly where we are now. Only half a position, and I'm still looking to add half more. Whether it's lower or higher, we're gonna see. But yeah, it's payrolls really. So I'm not touching it until then. But no, I don't have anything to add. You've covered pretty much.
Yeah, I'm just gonna have a quick look at other things because people are asking about the Kiwi. And bunds, bunds. I'm not trading bunds. I watch the yields, Arif, but I'm really not actively trading bunds. I've never been a bond trader. I'm basing my decisions on how yields go. So I have absolutely no clue about bond prices, to be honest. Okay, Aussie, Canadian dollar, because it's been getting a bit faster lately. So this is where we stopped this move right here around 135. The figure we had a pretty decent setback together with the rest of the dollars and with the oils making a comeback. So keep an eye on this 135, the figure, I'd say. If it would go break there, there's a possibility to get back into the low 134s. But in the meantime, keep an eye on 134, the figure, bit of intermediate stations here, 134, 60.75, where we are, 135, sorry, 65.75. We're a little bit above now. We are going to trade a yo-yo, I think, in there as well until the NFPs. Okay, quick look at the Kiwi pairs. And I'm going to update my charts live. So we had this latest move lower. This is on a more medium term. We had this latest move lower. We've broken a pretty significant trend line earlier around this 58.80. As long as that's not broken, in my opinion, if you look at this broken wedge, the overall picture for the Kiwi dollar, as long as we keep below 58.5, it looks still a bit bearish for me. Now, in the meantime, on the shorter term, we've seen this revival from the 56s, and we tried overnight. We tried to break above this 57.80, which we did, but we're already comfortably back below. So I'd be a bit careful. We really need to break those levels for the medium term for the Kiwi to have a chance to go back up. If not, personally, I think a yo-yo and a range until Friday. If anything specific comes out that would put the dollar back into the saddle, I wouldn't be surprised if we go and retest the lows, to be honest. And then a lot has been traded in our room on the Euro Kiwi. And the Euro Kiwi had some solid moves, especially over the end of the month. And some speculators after the RBA came out and only did 25 BPs, found it funny to try and take it back up to the highs, but it did fail to get back up to the highs. So this is a bit of a channel that I was watching. If you look at this is around 173.15. Where are we now? We're still a bit above 173.80. We did really a fast move lower onto this major red line on the Kiwi announcements, but it really didn't stay there for long. So I would start to watch this 173.15 again. If we can manage to get back below, I wouldn't rule out a move down to 172.25. I'm not inclined to do much with it right now. But perhaps here around 174.35 would be an interesting one to keep an eye on as well. Gavin, sterling yen, where are we? Yeah, I need to update it. I haven't traded it right now, but I know you're 164.5, 165. Okay, yeah, 164.5. No, it was the 164, the figure we spoke about earlier. I'm going to have to update my charts a bit because I haven't been trading this lately. But I'd say 164 on the downside, and then top side. This is interesting around 165.60 if ever we would revisit this. This was the high, and which coincided, I reckon, when cable was around the 115 zone. Yeah, when cable hit the highs, we must have been around here. This is to me a pretty interesting zone, I must say. So we've got like 164 to 165.60, 160 pips to play inside, in my opinion. Yeah, perhaps you're looking at the shorter side of things around 164.5. This prior, no, it's a little bit under there. No, but I'd say 164, 165.60, and it's moving enough to visit both ends of the range intraday. There's another bigger one, 163.5 in my opinion, and then danger zone, real danger zone if we get back below 162.5. That's for the sterling yen. And really, I'm going to not take too much of your time because there's stuff going on the geopolitical side which can throw charts in the bin rather quickly. Dollar MEX, we are running around this line. Up and down in around the 20 zone, as I was saying in our chat room as well, talking to Blake about this. To me, it really needs to break below 75.80 for dollar MEX to start going. If not, why not trading kind of a box around 2030, 1980, 2030 for a while. Euromex, I've been talking already enough about it, but we did go close to 20 the figure. Unfortunately, I was not greedy, but my offers are lined up around the 20 zone, so I haven't been adding to anything yet. But we're still not that far away in emerging market terms. 0.5% is quickly done, and we are in a bit of a traffic zone here. Between this 1990 and 20, so we'll have to see what happens, especially to risk. If risk starts to falter, it usually puts a little bit of pressure on emerging market currencies. But since it's Mexico and closer to the US than Europe with Ukrainian problems, I still think we're in the same pattern ultimately, and we may be looking for lower levels. And really, Catherine, yes, I'll have a quick look at it. Okay, do a bit of a live update here as well. So this is a trend line which comes from lower down, and we've been, as you can see, the market seems to take it as a bit of a pivot trend line. Go above, fail, touch it, fail, not reach it, go there, fail, and now we're roughly back on there. We're a little bit below, so keep an eye on this trend line, how that moves, and if I really adjust it down to the pip, it's even more clear. On the other side, these lows here, 104.5, call it the 104.50-80 zone, is going to be important. Now we've seen this several days where we see support there, and if ever we really start to hold. And now the 105.95 in intermediate. If we start to hold, why not? If oils are holding, if the OPEC tells us that they are going to cut those 2 million barrels, Canadian dollar could actually go higher, and yen actually suffer because yen is an importer of all energy things. and yen could actually suffer, and why not revisit the 108.60s. And really, that is about it for today. I think we kept each other long enough. So I'm going to thank everybody.
Thank you, Cayman. That was a really good review, man. Well done.
Stel, perhaps you can remind the people of price changes before we cut, and
yes,
other things you need.
So we have extended it. It's now going to be done on Monday. So Monday is going to be the last day of the special offer. We're going to be increasing our prices first time in 4 years. And if you consider how much we have added to our service, to the ways delivered, to in terms of Ryan and Cayman coming on as well, we've done a lot of stuff, and we're increasing our prices. So basically, from the close of business Monday onwards, price is going up to 189 a month, and the semi-annual and annual are going to have the same discounts as always, but based off that price. But until Monday, you have the chance to subscribe and lock in the price at 99 per month, and obviously the semi-annual and annual have the embedded discounts on them as well. So just keep that in mind. Only a few days left, and after that, you're either grandfathered on this rate or you've missed it. And any offers we do from that point on are going to be done off the new price, so they're not going to be anywhere near what the current offer is.
Thanks, Stelios. So guys, don't hesitate, girls, especially girls. It lacks a bit girls in our room. Yeah, we are for gender equality. Yeah.
Yes.
Yeah, and absolutely, and there is absolutely no discrimination in our room. We are open to talk to everybody about anything that we at least know something about. People, thank you very much. Thank you, Stelios. Have a great day. Stay safe. Keep your risk under control as usual, and we talk to each other tomorrow.
Bye-bye, everybody.